They say the hardest thing you'll ever do in the world is understand the income tax. The wealthy often employ expensive accounting experts to minimize their tax payments, because in the end, maximizing revenues is their only goal. So hey, and welcome to Fortune Mentors once again, where our experience teaches you some super valuable lessons, accelerating your path to growth and personal wealth. In today's video, we're going to share 9 strategies the rich use to pay little to no taxes. Keep these insights handy. You never know when you'll need them. Number 1, send money abroad. First up, you might want to copy the strategy of big tech companies like Facebook, Google, and Apple. They create companies in tax-friendly places like Ireland. The US company then pays licensing fees to the Irish company to operate in the US, which reduces its taxes by a huge margin. That's how you can do something similar by setting up a company in a low-tax country and invoicing your US subsidiary for services. Some big companies prefer paying fines over full taxes, making you think that a fine is for doing something wrong, while a tax is a fine for doing something right. Number 2, invest it all. Here's a quick fact you probably didn't know, but the rich don't keep their money idle unless they have a specific use for it. A key tax strategy is to understand the fact that reinvested profit isn't taxed. For instance, if your company is set to make a $5 million profit, reinvesting that amount back into the business before the fiscal year ends means you won't pay taxes on the $5 million. Cool, right? The best part is that this strategy accelerates business growth, boosting the owner's net worth with minimal tax obligations. So it's always a cool idea to consider investing all your savings again before the next fiscal year starts, so you won't have to pay hefty taxes. Number 3, invest in art. Buying art is yet another cool way to avoid taxes. Rich people understand the unique benefits of investing in art. When you purchase art, it counts as an expense. And as we've learned, many expenses are deductible. Here's the strategy. If you spend your entire annual income on a painting, there's no money left to be taxed. Now let's fast forward a few years. The painting's value has appreciated to $6 million instead of selling it for a profit. Donate it to a museum or your art foundation. You just earned a $6 million tax deduction, saving you from taxable income. Even if you decide to sell the painting, the government helps once again. If you reinvest the sale proceeds into more art, you won't pay taxes on the profit. That's exactly what makes it a clever move. Number 4, file for bankruptcy. Filing for bankruptcy can be pretty challenging, but for the super rich who understand how to do it, it's a strategic move. Now, imagine you're a lawyer earning $250,000 annually, and you decide to invest in a $10 million office building with a $1 million down payment and a $9 million. Unfortunately, a pandemic hits, your tenants leave, and the building's value drops to $5 million. Now, since the building is owned by a company, you can file for bankruptcy. While the bank may take the office building, they can't touch your $1 million house or your wages. Rich people might be broke on paper, with a net worth of 0 or negative, but they'll never be poor. This means not having to pay taxes till you've recovered your amount. Number 5, give some of it away as a gift. Giving money away is a rich person's move. You know, you can give money to people and it's non-taxable with a catch. The catch is that there's a $15,000 cap on the gift. If the gift is below this limit, you don't have to report it to the IRS. Now, you might think $15,000 isn't much for the super rich, and you're right, but here's where it gets interesting. The lifetime gift exemption is capped at $11.7 million in the US, as long as each gift stays under the $15,000 limit. This means the super rich can accumulate tax-free wealth up to $11.7 million. Which allows them to make significant financial moves. Number 6, hold in privacy coins. Cryptocurrency is revolutionizing wealth transfers and security, providing exceptional privacy. With coins like Bitcoin and Ethereum, regulatory measures ensure transparency, linking wallets to individuals for tax purposes. Notably, crypto sale profits are often taxed at a favorable rate, typically 10% in many countries. But hey, the game takes an interesting turn with privacy coins. Yep, Bitcoin and Ethereum are heavily regulated, but privacy coins like Monero, Dash, and Zcash offer complete anonymity in transactions. Once you've earned your money legally, you should have the right to transact with it privately, free from prying eyes. This new frontier in finance provides the super rich with an additional layer of financial privacy and control. Number 7, turn to a trust. For the wealthy, the burden of estate taxes is a big deal, with up to 45% of wealth subject to taxation when passing it on to the next generation. In the United States, being known to be rich requires a pretty hefty net worth. To go through this, the rich turn to trusts. They place their assets in a trust under specific conditions, which removes them from personal ownership. This clever move shields the property from inheritance tax, and this means a pretty smooth transfer of assets. Trusts also provide control during one's lifetime, preventing potential financial mismanagement by beneficiaries. Also, smart contract-like rules can be established, which allow controlled access to assets based on predefined conditions such as age or educational milestones. Number 8. Give away money for donations and charity. For number 8, did you know that the money donated to charity is not taxable? This is why many wealthy individuals build foundations, rather than entrusting funds to the state's management. These foundations make sure they create a direct and positive impact on communities. Interestingly, even non-taxable foundations have deductible expenses necessary for their functioning. These expenses include various assets like land or vehicles. Donating such assets to a charity one owns still qualifies as a charitable contribution, and as the head of the charity group, you might as well continue to use these donated assets, such as a car, while benefiting from the associated deductions. Number 9. Move to a place with little to no tax. On to the last effective strategy the wealthy use. These folks move to locations with minimal or no taxes. Sure, it may not look like it, but this move can significantly impact your financial life. Historically, people relocated to tax havens like Dubai, Monaco, the Cayman Islands, or the Bahamas, establishing these places as their main residence. The key advantage is that these countries impose no income tax, so folks can retain more of the money they earn. However, it's worth noting that the process of moving to such places can be expensive, giving the wealthy an advantageous edge in life. While locations like Monaco have a high cost of living, the tax benefits often outweigh the associated expenses. That's about it for today's video. Now that we've seen the entire video, do you think there could be more to these smart ways the rich people can use to save their tax money that we probably skipped here? Feel free to let us know in the comments. Also, don't forget to like and subscribe for more videos like this from future mentors. See you in the next one. Goodbye.